Next up, we are joined by David Breeze, Executive Chairman and Managing Director of BPH Energy, with the ticker code BPH, to tell us more about their oil and gas projects held by investee Advent Energy. I will now hand you over to David.
Thank you.
David, I'll bring up your presentation.
So thank you for that. BPH has investments in Advent and Cortical, but I'm going to speak today solely on Advent. This slide puts the current gas market issues in Australia in context. As you'll see, very current opening up new sources of gas will be critical to price hikes over the next 2 years. And the East Coast gas shortfall is imminent, and the forecast on the shortfall by the ACCC is dependent upon demand from gas-powered generators decreasing to record lows. So it puts Australia and the East Coast into a precarious position. And what all of these issues in energy mean at the moment, as you see in the final point on that slide, is a network price of 40% from 1 year to the next is almost unheard of, but it's about to happen in the Australian Capital Territory. And this is all to do with the issues that we're having in the national gas market at the moment and national energy market. So in context, the PEP 11 project is offshore Newcastle. It's 30 kilometres south-southwest. It addresses both the forecast gas shortage and has an objective of net zero emissions and can provide a solution to carbon capture and storage. 1/3 of all of Australia's CO2 emissions come from industrial and other uses in the arc between Newcastle through to Sydney and down to Wollongong. And location is the key in terms of carbon disposal. In other words, synergies are greatest where the industrial point sources are both near each other and a viable storage site. And that's what we're looking to do with the drilling of the gas project offshore Newcastle. So in New South Wales, 300,000 jobs rely on gas supply. And it's an important factor, or a critical factor, in 84% of the state's industrial gas load and 26,000 businesses. This slide puts the context of supply and New South Wales' position into context. 98% of New South Wales gas requirements come from other states, and a constrained national gas market will see further gas price rises. But what the AEMO has said is that there will be a 43% reduction in gas supply out of the Victorian offshore gas fields between now and 2025. And that really puts into context the other slides that I've just outlined, or the other points that I've just outlined in the slides to date. You can see how constrained the gas supply pipeline network is into New South Wales, particularly taking that point into account on the 43% reduction. This is an extract off Cooper Energy's presentation, but it really gives the context in terms of both supply and demand in Australia East Coast. You see there the dotted black line, which is demand going out to 2030. You see the input potentially of Narrabri in the pink colour in that graph of supply. There is a significant shortfall between forecast supply into this market and the demand curve. What that's doing is it's illustrating the growing influence of LNG pricing on domestic gas prices as that southern supply declines. And what you see there is the importance of the supply constraints into this network in the peak of winter when the demand is highest, but also when you're seeing in the Northern Hemisphere, the summer demand. Conversely, of course, in our summer, we have the cold weather in the Northern Hemisphere, and that increases the demand for LNG at critical times. What this is doing is providing an impetus to price increases over the period between now to 2030. And that illustrates the importance of our project as a gas project offshore Newcastle. So the importance of that is really recognised by the Australian government and New South Wales government signing an MOU where $2 billion was provided under that MOU to New South Wales with a specific target to bring an additional 70 petajoules a year into the New South Wales market. That's yet to properly occur. And so what you're seeing here in the terms of the environment of power usage is that you had the AEMO having to intervene into the electricity market more than 250 times in 2019-20 compared to just 20 times in the 3 years earlier to that. In other words, Australia is achieving significant and world-leading gains in the input of solar into the supply network, but that's causes an instability. And so we look towards gas-fired power generation as a baseload replacement. Next slide, please. So the offshore PEP 11 project has a prospective recoverable of 5.7 TCF. And we're looking to drill that as the next step in the process, subject to regulatory approvals. This slide illustrates the importance and the geology that we're dealing with here. And essentially the evolution of hydrocarbon prospectivity of the offshore Sydney Basin back in 1993 was before we had done our seafloor sampling in the offshore area, and that's going to, and I'll go to that in a moment. But what you're really seeing is the model results in all of the late Permian coal measures being in the gas window. And that, of course, is where our baleen drill target for the Sea Blue 1 well is placed. So the target that we're looking at here is 6,000 acres of amplitude closure, or about 25 square kilometres. In other words, a very substantial drill target, 26 kilometres off the coast. The slide illustrates the work done post the 1993 study of Grabowski, and it shows the significant gas seepage characteristics in the entirety of the area offshore from Newcastle down through to Sydney. And the importance of that I'll illustrate in the next slide, please, if we can move to that. And that is gas chimneys have been observed to feature, to be associated with gas seepages like pockmarks, and they're illustrated in the offshore Sydney Basin. And active seeps and hydrocarbon migrations are a key indication of ongoing hydrocarbon generation. Where you have this position, Schumacher has shown that 85 or 80% of wells on a global basis come in as discoveries. The CSIRO did research with us on those seismic attributes in the area of baleen where we're looking to drill. And the key point about this is multiple simultaneous seismic amplitudes that show up gas reservoirs at the target drilling depth that we're looking at just over 2,000 metres. And the same thing here with RMS amplitudes are useful just as instantaneous frequency are to show the presence of gas and or gas condensate. So, in conclusion, we propose to drill a gas exploration well. We propose to explore simultaneously for a carbon storage zone 26 kilometres off the coast and adjacent to the major emission sources of the Newcastle Hunter region. There's no present confirmed geological storage site in New South Wales, and that makes our project extremely important for carbon capture and storage. We will look to provide, the Sea Blue one well will provide the opportunity to cost effectively assess that CO2 storage potential. Thank you for listening, and the slide is in fact up on the ASX now, showing so you can go through that at your leisure. Thank you.
David, thank you for the great presentation. I've got a quick question to ask. So once the approvals for PEP 11 do come through, will the company have everything in place to start exploration immediately, or will there be further tenders to finalise?
So there are further tenders, and we're going through that process at the moment, but we're going through a planned process, as you're seeing with our announcements, where we're making a sequential appointment of contractors to meet the requirements, starting with long lead items and moving through into that process.
Wonderful. Thank you for joining us today, David. We look forward to further updates.
Thanks so much for your time.